Boom! What's going on, Investor Maniacs? Your boy, a Night Rider here, and today we've got your Robinhood stock market update for the week. Hey man, who's up this week? By a really big margin, Roku is America's most popular video streaming platform. A research report revealed that the binge-empowering dongle makes up 30% of all streaming devices sold in the US. That is double the share of number 2 competitor, Amazon Fire TV. What's Roku's edge? It sells its own dongle hardware. Don't you just love that word, dongle? It's such a dongle. It sells its own dongle hardware device, and it is also pre-installed on many smart TVs. Whew, it's a dangerous combo. Although the stock has ran up like crazy lately, I'm still in love with Roku, and it's one of my favorite long-term growth stories. Look at this one-year performance, up 116%. Whew. Baby. So it turns out Delta is the only major U.S. airline that does not have a single Boeing 737 MAX in its fleet. That means it's been gaining market share since March, when its rivals had to ground the troubled planes and cancel scheduled flights. It told investors last week that its revenues increased more than expected at 8% last quarter as a result. Beautiful. Hey, I liked Delta before the 737 MAX issue, and I like it even more after or during this 737 MAX issue. Electric car icon Tesla does not report its second quarter earnings for a couple more weeks, but it served up its quarterly vehicle production and deliveries report. Good news for shareholders. Tesla is back to setting personal record numbers of cars sold like it's supposed to be doing. That pushed shares up 7% on Wednesday. Having said that, you can see for the week, it's actually only up about 1%. It has come down since that 7% push. And who is down for the week? Liquor before weed. On Independence Day Eve, Canopy Growth, who is Earth's biggest cannabis company, announced the co-CEO was, quote, stepping down, but the man himself clarified that he had actually been terminated. The reasons for the termination: Corona-owning liquor legend Constellation Brands owns about 37% of Canopy's shares and effectively controls 4 of the 6 board seats on Canopy's board of directors. And Constellation wants Canopy to focus more on CBD-infused drinks and less on medical marijuana. So it canned the co-CEO to send a message. I like Canopy Growth, but if you want a more conservative play, I would go with Constellation, and I still like them even after canning the co-CEO. Technically, this next stock rose last week, but we're gonna go ahead and list Deutsche Bank as a clear Debbie Downer. It announced yesterday that its turnaround plan is to lay off about 20% of its workforce. The pain, 18,000 jobs in total, hits the London and New York investment banking divisions, but Wall Street is relieved that at least it's going back to its German roots. I probably wouldn't recommend hopping onto Deutsche Bank train at this moment. The June jobs report dominated, but stocks fell. Here's why. Stick it up on the fridge. Friday, we learned that the U.S. economy added 224,000 new jobs in June. America! We'll get to why stocks fell on such good news in a sec, but here are 2 interesting developments we noticed. 1, manufacturing is doing its thing. Even though it's the sector most affected negatively by the US-China trade war, 17,000 jobs got created in the business of putting things together. That's the most since January. And second, the ironic hiring issue. Since so many Americans are getting paychecks, there is now a huge demand for even more workers to serve those new workers burrito bowls and teach them yoga and everything else that normal people spend money on when they start getting paychecks. But with the unemployment rate being close to a record low at 3.7%, finding new that new marginal worker, not marginal as in they're not important, but the new marginal from a mathematical standpoint, that marginal worker is getting increasingly difficult as the unemployment rate goes down. Let's toss in a little bit of context. It helps us understand each monthly jobs report a bit better when we take more into context. So let's compare it to expectations. Economists expected 162,000 new jobs. We got 40% more than that in June. Wow, that is a big old beat. But let's also compare that to last month. Job growth plummeted in May to just 72,000 new jobs. So this was a hard rebound in June. Let's also compare it to some kind of year-over-year type metrics. The average number of jobs added monthly over the last 3 months was 171,000. That's down from 223,000 that we were adding during the same 3-month period last year. It's a sign that expansion is slowing, which again, obviously is a problem of adding so many new jobs. You have fewer people who are unemployed. So what's the takeaway? It's all about the Fed's July get-together. America's central bank decides at next month's meeting what to do about interest rates. Lower them to encourage borrowing and spur growth, or keep things put because the economy doesn't need any extra help. It could also increase rates, but that doesn't really appear to be in the cards right now from their comments. Mid-trade war, investors have been expecting/hoping for the Fed to lower rates, which would be great for profits and stocks. But with this very strong job report number, that may keep things in cruise control instead of decreasing rates. That's good news for the economy, but not exactly good news for the stock market. Hey guys, that's it for today. I appreciate the likes, comments, and subscribes. Hope you have a good one.